Ever wondered what Bitcoin halving is? Let's delve into it. Bitcoin halving is a major event in the cryptocurrency world. It's like a clockwork taking place approximately every 4 years. But what exactly happens during this event? Well, the rewards that miners receive for adding new transactions to the blockchain get cut in half. That's right, they're halved, hence the term Bitcoin halving. This process is a part of Bitcoin's deflationary nature, designed to control the supply of this digital asset and prevent inflation. It's a bit like a digital gold rush, where the amount of gold discovered decreases over time. Just as gold miners find it harder to mine gold over time, Bitcoin miners find the rewards for their work decreasing every 4 years. This has profound implications for the rate at which new Bitcoins are created, and subsequently, its market value. Now that we understand what Bitcoin halving is, let's explore what happens to the market before and after this event. Picture the market before a Bitcoin halving. It's a time of great anticipation. A bit like the build-up to a highly anticipated sporting event or the release of a new technological gadget. The atmosphere is charged, the air thick with speculation. Conversations are awash with predictions and conjecture, as everyone from seasoned traders to novice enthusiasts try to forecast the implications of the halving. The trading activity during this period typically sees a significant uptick. Bitcoin changes hands at an accelerated pace, as market participants attempt to position themselves advantageously ahead of the halving. This increased demand, in anticipation of a reduced supply, often leads to a surge in the price of Bitcoin. However, while this increase in price is a common trend observed in the lead up to a Bitcoin halving, it's essential to remember that it's not a guaranteed outcome. The world of cryptocurrencies is a dynamic one, shaped by a multitude of factors, both predictable and unforeseen. The excitement, the anticipation, the speculation, all of these give the market a sense of urgency and dynamism before a Bitcoin halving. It's a fascinating period to observe and participate in, offering a window into the unique characteristics and behaviors that define the cryptocurrency market. So, that's the general market behavior before a halving, but what about after? Imagine the dust has settled and the Bitcoin halving has occurred. We're now in the aftermath of this significant event, and the market is adjusting to the new reality. Typically, what we see is a cooling-off period immediately following the halving. The hype and anticipation that built up in the run-up to the event fades, and the market takes a breather. Investors and traders are now dealing with the reality of a halved block reward, which means fewer new Bitcoins are entering the market. This reduction in supply often leads to a fascinating dynamic. With fewer Bitcoins being mined, the supply of new coins is limited. Yet, the demand from buyers remains. This mismatch between supply and demand can create upward pressure on the price. However, it's crucial to remember that this is a gradual process. The market doesn't skyrocket overnight. It's more akin to a slow-burning fuse that, given the right conditions, can lead to an explosion in price further down the line. But here's the catch. These are trends, not certainties. The world of cryptocurrency is volatile and unpredictable. External factors like regulatory changes, technological advancements, or shifts in investor sentiment can all impact the market in unexpected ways. So, while we can look to the past to guide our expectations, we must always remember that the future remains unwritten. So, that's a rough picture of market behavior after a Bitcoin halving, but what does all this mean? Well, let's dive deeper into that in our next segment. So, we've taken a journey through the intriguing event of Bitcoin halving. It's a unique mechanism built into the Bitcoin algorithm to control the creation of new Bitcoins and combat inflation. Every 4 years, the reward for mining a new Bitcoin block is cut in half, hence the term halving. We've also explored how the market typically behaves before and after this event. Before a halving, there's often a surge of activity as people anticipate the reduced supply of new Bitcoins. After the halving, the market can be unpredictable, sometimes seeing significant price increases as the supply of new Bitcoins slows. Remember, the crypto market is influenced by a myriad of factors, and Bitcoin halving is just one of them. Understanding Bitcoin halving and its impact on the market is crucial for anyone involved in the crypto world. Keep these points in mind and you'll be better prepared for the next Bitcoin halving.